Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast. Going into the 22nd. Going to start off with natural gas. I warned on Thursday that we probably see some short covering going into Friday, which we saw here. I warned in the post-market podcast on December 5th that this went out warning of pressure. We came off $1.44.9 down into here and a number of other different levels to be short below on the way down. Those are all on hold. Decent trade above 421.80. We'll project this upward 370 ticks plus. But if we break above there without breaking above decently and back below, look for decent pressure to come in. We break below 384.20 to 384 and back above, look for short covering to come in. If we break above this line here, that'll also warn a strength. That's going to come in at 437.70 minus 0.8 of a tick per hour starting at 6 o'clock p.m. Sunday. Okay, and the crude oil. Been chopping back and forth a little bit here. The trade below 75.44 to 50 warned a solid pressure. We came off $20.55. A number of different bearish calls along the way in here. Then we broke above this formation right here, which turned this back to bullish. If we further break above this formation right here, which is going to come in at 560, 56.61 to 56.62, that's going to warrant a decent strength, possibly for days. Excuse me, a solid trade above there. We'll warrant a solid strength for days. If we break above there solidly and back down through it solidly, look for solid pressure to come in. If we fail back down below this formation right here, which is going to come in at 55.99 minus 1.7 per hour starting at 6 o'clock, that'll warrant decent pressure. Okay, in the RBOB and the Feb, a maintain gap higher tomorrow. We'll leave a minor bullish reversal below. I warned of range expansion on Friday, which we saw. Now we've rolled into the Feb contract. This is still showing January, but we're going to roll those trades into the Feb. Trade below 422.60 brought in 2.56.03 dollars of pressure. Number of other bearish calls in here, and then on a shorter term basis, we held a 195.17 high and rolled over 27.22 cents into a bearish trend that was on exhaustion above. That's on hold. We broke above this formation right here, which is bullish. We broke above and then traveled down above it, and then popped up in here. So decent trade below this formation right here, which is going to come in at 170.26 plus 1.6 per hour starting at 6 o'clock p.m. That'll warrant a decent pressure. If we break below there decently and back up through it decently, look for decent short covering to come in. Also, if we trade above this formation above, which is quite a ways away, but this comes in at 168.99 to 175.94 to 633. Plus 1 tick per hour starting at 6 o'clock p.m. That'll warrant a decent strength, likely for days. In the heating oil, I warned a range expansion on Friday. We saw that. This still shows January, but we're rolling into February. We're rolling these trades into the February as well from the January. The trade below 247.35 brought in 35.16 cents of pressure. A number of other bearish calls in there as well. And although we had broken above this formation right here, we've broken below this formation right here, which I would not suggest leaning against as a short. But nonetheless, if we break back above it decently, that's going to warrant a decent strength. That's going to come in at 213.30 plus 2.5 per hour starting at 6 o'clock p.m. A further break below this line right here, which comes in at 210.06 minus 11 per hour starting at 6 o'clock. That'll warn of continued pressure. Okay, in the Brent, we've broken above this steep formation on Friday. The trade below 64.37 brought in 565 of pressure. A couple other bearish calls in here. Those are all on hold. Trade above 59.69 minus 3 per hour. I said now warns of strength, and we've seen strength up to 60.65. If we were to trade above this formation above, which is quite a ways away, but that comes in at 61.85 plus 0.5 of a tick per hour starting at 6 o'clock p.m. That's going to warn of continued strength likely for days. If we were to roll over and take out this formation on the downside, that would warn a renewed pressure. That's going to come in at 59.36 minus 3 per hour starting at 6 o'clock p.m. The gas oil, maintain gap higher in there. On Monday, we'll leave a minor bullish reversal below. We held exhaustion above with an 805 high and rolled over $200. We got bullish in here and then bearish with the breakback below this line. And that was at 617.20. We've seen pressure down to 605.25. We're to break above this formation right here, which is going to come in at 612.86. 612.86. Bear with me a minute. Minus 29 per hour starting at 6 o'clock p.m. That'll warn of decent pressure. I mean, decent strength. Bear with me a moment. Just calculating here, something here for a second. And going into Monday, the heating oil is the weakest out of the three, the RBOB in the middle, and the crude the strongest of the three relative to one another. Okay, thank you for watching. I hope you have a good evening, and I'll see you on tomorrow's podcast.